Welcome to the Market Huddle with Patrick the Content Machine Ceresna and Kevin the Macro Tourist Muir. So grab a drink, get comfortable, and get ready for a deep dive into the markets. Take it away, guys.
It's October 18th, 2019. I'm Patrick Ceresna.
And I'm Kevin Muir. Thanks for tuning in this week. In this episode, we are joined by Bespoke Investments' George Pearkes, and then we have a special return appearance by the milkshake maven himself, Brent Johnson. For our WTF segment, Steve Bannon remembers the Thrilla in Manila.
And in this week's trading history, we go back to review the crash of 1987, which we've covered actually in the past, but we're going to go and revisit it with a little bit of Paul Tudor Jones in there. And then we're going to review the top 5 things to watch this week. But before we do, we're going to talk drinks. But Lena,
yes.
We have no beer sponsor this week, do we?
No, unfortunately, we don't.
No,
So,
and it's
that's
actually
not going to
my
stop
fault.
us, though.
It's actually my fault because I'm down in Florida and I did not bring the sponsored beer, and so we actually have to wait till I'm back in Toronto to do that. But we each have a drink of our choice. What are you guys drinking?
Lena, you go ahead.
I'm drinking Mayday Belgian Pale Ale from the Napanee Beer Company. It's a strong beer,
Nice.
5.7%.
Nice. How about you, Kev?
Well, I went with the old standby Moosehead Breweries.
Nice.
Awesome. I was actually having a quick look when I was looking on the Wikipedia. I didn't realize it's Canada's oldest brewery, and I'm just going to read you very quickly. Susan Olin moved from England to Nova Scotia in 1865. They opened it. It was called the Army and Navy Brewery in 1867. And then John died, and they changed it to Olin and Sons. But then they faced 2 fires, which they then recovered from. Then Susan died. The company went to their sons, George and Conrad. But then the trouble is the Halifax explosion of 1917 killed Conrad and destroyed the brewery. A year later, they moved their sons to Halifax and bought another brewery. And then that ended up being the Moosehead that we see. But I kind of think to myself, they had some bad luck there at the run at the beginning. I was kind of shocked that they stayed in it, but I appreciate it because I'm a big fan. What are you drinking, Patrick?
Well, I'm actually drinking Canada's national drink, the Caesar.
Caesar.
Yeah, that's and for many of our listeners in the U.S. and abroad who are not familiar with this, it's the better version of the abomination of the Bloody Mary. And
What makes it different than Bloody Mary, Patrick?
Well, because it's made with clamato juice. That delicious clam broth mixed in with the tomato juice to give it that delicious taste, and most people are stunned by it. But it's actually in Canada. This is a religion here, right?
Well, it's not just in Canada, Patrick. Because when I go cat skiing and we end up in a lodge, often there's Americans, and when they get a taste of it, I'm not a Caesar drinker, so I don't know. But these Americans, when they get a taste of it, they can't go back. It's like tasting meat for the first time for them.
It tastes way better than it sounds, you know?
I had to smuggle clamato juice down to Florida with me because trying to find clamato juice down in Florida is like trying to find a pimple on a whale's ass. It's like it's impossible to find it. So I had to smuggle my own clamato here so I can mix my own drinks. But the other key to a really good Caesar is actually putting in pickle juice.
Pickle juice
into the Caesar. It's
God.
anyway.
It
just sounds terrible.
It sounds for the people that have never had it. It sounds terrible, but once you've had it,
tastes much better than it sounds.
Okay.
All right, Kev, give us a disclaimer, buddy.
Okay, clients and employees of East West Investment Management may hold positions in securities mentioned in this podcast. Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in this show. For more information, please visit eastwestfunds.com. Side effects of too much market huddle may include ruophilia, hyperamnesia, and or egoecophilia. Do you have any idea what any of those are, Patrick?
No, actually, I have no clue.
I have no idea.
Ruophilia is an emotional attachment or love of kangaroos.
Okay.
Okay. Hyperamnesia is pretty easy, but ego ecophilia is actually one of my favorite. It's the love of the sound of one's own voice, something that people like with podcasts might be accused of having.
I would never imagine, considering I refuse to listen to my own podcast.
You and me, bud. You and me both, bud. Okay.
All right. So anyway, let's move on and let's quickly cover this week in trading history, Kev. And
well, it's that time of year, right, Patrick?
It's that time of year, the middle of October. And it's kind of a cruddy that we covered it last week a bit when we talked about George Soros in the tale, right? But It was still a great tale. But it was on October 19th, which is, we're recording on the 18th, so it was we're one day ahead here, of 1987 was the infamous market crash. And for most traders in today on Wall Street, many of them weren't even born during the 87 crash. I was just riding at 10 speed in my parents' driveway. But
Patrick, you were 32 at that time, so.
Anyway, but the 87 crash was something special. And you know what? I think to start off the mood, let's play a quick excerpt I created for that has a little bit of Paul Tudor Jones on the floor of the exchange during the 87 crash day. So let's watch it.
Good afternoon, everybody. We welcome you to our Monday edition of Market Wrap, and historic day, obviously, as we've been telling you all day today. If you have been away from your television set and haven't heard about the stock market, this was it. We have exceeded the percentage drops that we saw in 1929. Point-wise, this, of course, is a record as well. Volume-wise, records across the board as we saw the tremendous selling that we experienced last week hit the trading floor once again today. And how? First, let's go to the American Exchange live, where the tremendous amount of selling there as well today, where we have futures trader Paul Tudor Jones, the president of Tudor Investment. Paul, can you hear me okay?
I can hear you, Bill.
Okay.
I'm not sure I want to, but I can.
Yeah, I can imagine, buddy. All right, give it to me straight, Doc. What, in your view, is going on?
I think that we got a market that has been seriously overvalued for some time. I think that what we've witnessed the past couple of days has obviously been the piercing of this bubble. And I think that what you saw today and what you may see tomorrow morning will be the culmination of this selling climax for now, and I emphasize for now.
Now, you had told me a few weeks ago that you were looking for a drop. Did you expect it to be this precipitous, this quick?
No. We thought the market would be under pressure through October. We thought it'd go to the low 2200s, but we thought you'd see this kind of a break sometime early next year, but quite apparently, the market's doing exactly what it always does, and that's fooling 99.9% of the people, and that's why it's happening now. I would say Wall Street uniformly was unprepared for this magnitude of a drop. And, of course, that's why you got it, because that is the nature of the market.
Yeah.
So, Kev, now we've in the past referenced or talked about it. I actually want to kind of live through what was going on in the 87 crash, right? I mean, this was when portable phones came with a box that you had to wear around with like a purse. And at the time, computers were all these little like digital, like all the ASCII star stuff all over the screens, right?
Right.
It was a crazy.
It was a long time ago. It was a long time ago.
And the S&P 500 at the time was actually 1/10 of what it was today. I mean, it was at pretty much near the 300 level when today it's at 3,000. And so when we're talking about price levels, it's important to put into context, shave a zero off of it, right? Or add a zero onto it to kind of put it in today's context. But it was back then, from a Dow perspective, it was a 500-point drop in one day, 22%. And what I wanted to talk about first was just what happened that day. And so I have an intraday chart. And so it started off on the Friday before, because it happened on a Monday. And that Friday, the stock market, the S&P 500 dropped from more or less around the 300 level down to about, I'm rounding, about 280. So it was a solid, 6% drop in the stock market in one day. I mean, today,
so
if that happened,
we're taping. Yeah, so if we're taping this Friday afternoon, it's the S&P looks like it's getting pinned to 3,000. So that would be like this being off 180 points.
Right, something like that, right? About 180 points, just a solid wipeout, and then comes Monday. And so right off the bat, Monday morning during the crash, it starts off around 280 on the S&P and wipes out by 11 o'clock in the morning to about 260. So wiping out what would be the equivalent of about 200 S&P points today in about an hour and a half from the open.
Right.
For most people, that's an oversold condition that flags a buy, right? Like, I mean, wiping out 200, if we saw today a 200-point drop and then another 200-point drop the next day, most people would be buying the dip pretty quickly. Yeah. And it did offer the first reaction. And so we had the first retracement between 11 to 12 o'clock, about an hour. And and the market retraced from about, let's say, the 260 level, I'm rounding obviously, to almost to 270. And so you got a pretty good bounce, and then came lunchtime, and then it wiped another 200, just going from the 265 kind of level to about 245 in a span of just over an hour and a half. Right. So another big leg lower, just shellacking the market. Then it gets a little bit of a 230 kick. Just popping what was a minuscule little rally that lasted maybe 10 points in about 15, 20 minutes of time. And then they slam it into the close with it going from like 245 all the way down to like 225. Another 200 or another 20 S&P point drop, which would be another equivalent of another 200 S&P points in the final hour. And so it was just a complete wipeout, just a day where the high was the morning open and the low was the close at 4 p.m., right?
Yeah, and it's just ugly.
It was very ugly. And what's interesting is that it then bounced 20 S&P points, so about the equivalent of 200 points, right on the open the following Tuesday, and then gets slammed, making even lower lows by lunchtime, and that became the low of that move. So it had one more kind of intraday sell-off the next day that kind of solidified the low print, and then it kind of created the big counter-trend retracement that began there. But it was a 20% wipeout in one day.
Do you know what I think is interesting, Patrick, is that Paul Tudor Jones, you played the video earlier, he talked about the fact that many people were trying to demonize anybody who had predicted it and who had gotten short. And I remember in the Market Wizards book, he talked about the fact that he was actually spooked by the level of officials that called him regarding his positions. Mm-hmm. And he was, there we go. You're too busy drinking your Caesar there. Yeah. I could hear it. But what I is actually, and that just goes to show you that when the shit hits the fan and people are basically looking for a scapegoat, he realized very quickly that someone who had profited handsomely from it doesn't want to be bragging about it. And I think that's a very interesting part of that whole phenomenon, because you go look at the Market Wizards book, he goes on in length and talks about the fact that he was scared and spooked by the fact that these officials of such high level kind of within the administration were calling him up.
That's right. Anyway, all right. So Kev, let's move on.
Okay, joining us now is George Pearkes from Bespoke Investment Macro Strategist. It's a pleasure to have you, George. Welcome to the Market Huddle.
Hey, thanks for having me, y'all. It's nice to talk to some Canadians.
Nice.
George, I was just having a look at your Twitter feed, and I noticed that you have something that I had to retweet because I thought it was just so kind of illustrative of what the current state of the market. You said that I have Evans, a Federal Reserve, board member, Evans down as the third most dovish non-governor and second most dovish non-governor voter. And he says that no more rate cuts are needed this year. Is the market completely out to lunch with the fact that they have October priced as an 85% chance for a rate cut?
Well, I actually think today we got evidence that the market is not out to lunch. And that came from Clarita, who is a governor. Clarita said, look, the Fed's going to act as appropriate to maintain the expansion. And that, to me, with markets pricing an 85% chance of a cut in October, they need to do more to push back against that if they don't intend to cut in October. And they know that, right? Like, they're not going to deliver an October surprise without grooming the markets for it first. So, Clarita saying act as appropriate, which is the same language that he's used this whole time through the easing cycle they've been on since the middle of the summer. That to me suggests that the market is right and that they're going to go ahead and cut in October. Although it is super interesting because, Evans did not sound like he was committed to a rate cut this week. He said, well, it would give us a chance to catch up on inflation, and that's good, but I'm also not super convinced about it. And he is one of the most dovish members of the FOMC. So, we've definitely seen some of the enthusiasm come out of the FOMC with regards to rate cuts, even though they probably will go again in October.
Do you think that the Federal Reserve was caught unaware with this repo kind of gate or whatever it is in terms of the fact that we had this spike in overnight rates and that they lost control of the front end of the curve?
Yeah, I mean, I don't want to oversell the fact that they did lose some control in the sense that, there was nothing they could do. It's akin to somebody who's been driving late at night on a freeway for a long time and it's dark out and the heater's blasting because you're in a cold Canadian winter and, you get a little dozy and you maybe start to nod off, but there are those rumble strips on the side of the road to wake you back up and then you're good and you can get your cup of coffee or take a break, probably is the safest thing to do, and sleep for a bit before getting back underway. And I think that's what happened with the Fed, right? They have the tools and they had the tools in September to deal with the repo crisis, to provide reserves to the market, make sure that there was enough liquidity out there. And they just didn't realize fast enough that they needed to get on that and do it. And I think part of that is on actually not the Federal Reserve in Washington, but on Williams, who is the president of the New York Fed, because he came in and there was some turnover in leadership on the market's desk. Simon Potter, who is the guy that had run that part of the New York Fed for a long time, basically was phased out and left the New York Fed or started to depart the New York Fed. And within, a month or 2 months of that announcement, you have the repo stuff blowing up. And so I think Williams sort of thought that he was in this cushy, high status new position and that he wasn't going to have to do much. And then all of a sudden he's got, real problems in the money markets to deal with. Nothing that the Fed can't handle, but it definitely reflects poorly on how he started his tenure as the New York Fed's president.
Wasn't there a little bit of egg on Williams' face in that he had to get Potter back for the FOMC board meeting?
Yeah, I'm not sure if he was the one that would have invited Potter or if the Federal Reserve Board in Washington would have been the ones that asked for him to come in. But I mean, he was absolutely the right person to be there to talk to them about what was going on, even though he had already at that point moved out of his role at the New York Fed. So yeah, tons of egg on Williams's face. And you never like to see people manage, relatively stable and competent institutions poorly. And that's sort of what looks like what happened with Williams.
Okay, so do we see a situation where we get a repeat of Christmas time when again they had some trouble with liquidity going into year end, or do you think that this kind of wake up call, the rumble strips as you so eloquently kind of described it, is going to make it so that they get out ahead of anything that might happen at Christmas time?
I think it's very unlikely we'll see a significant problem with liquidity around year end. So year end is always going to be tough in repo with the way the market, or with the way regulations and the way markets look at year end exposures. Really, it's regulatory that drives it more than anything else. There's just not that much balance sheet to go around. But with the Fed now talking about standing repo facilities, they're going to be buying bills to provide more reserves. They're going to have overnight and term repo around the year end period. They're aware that they need to be keeping a close eye on this and that this isn't something that can just run in the background. I have a hard time believing that if we do see any major liquidity issues, that they're going to be something that lasts more than a few hours one morning before the New York Fed steps in with a bazooka and says, okay, guys, we'll provide the funding you need to get you through year end. This isn't going to be a problem. Everyone calm down.
Okay, so George, you were actually one of the guys that first put me on to MMT. I actually reached out to you originally when I was confused by it and didn't know what it was except for the stand for modern monetary theory. I was wondering what you felt in terms of the acceptance of this theory and the kind of change in attitude that you've seen over the last little while. I was wondering if you wanted to comment in terms of, do you think that it's becoming something that at the very least more and more kind of practitioners are looking at and trying to understand how a modern fiat-based kind of economy works?
Yeah, I mean, I think it's gotten a lot of attention from markets folks because it's a new and interesting idea in that respect. I mean, how much that's digging into the sort of body politic or the zeitgeist in the economics world is an open question. I mean, we had the Brookings Institution come out this week with a piece where they said, oh, millennials are super worried about climate, but they're not worried about the national debt. What can we do to fix this problem? And it's like, guys, you don't get it, right? I mean, nobody who's got any sort of modern monetary perspective on how governments finance themselves, how government financing relates to the broader economy. Nobody would ever take that approach and say, okay, well, actually, government debt is a bigger problem in the United States or any part of the developed world. It's a bigger problem than climate change. I think we've definitely seen some uptake in some of the ideas surrounding MMT and some of the logic that underpins it. But we've still got a long way to go in terms of people understanding, the real core precepts of what's being said with modern monetary theory.
Do you think we're any closer in Europe?
Not really. I mean, look,
No.
like Germany is set to run a 2-ish% fiscal surplus this year, right? This is a country where national debt relative to GDP, which isn't a very good measure of debt sustainability, but is one people look at, that's going to be falling below 60% in short order. They've got major infrastructure issues, literally infrastructure crumbling around them. They've got no military to speak of. They've got room to ease their tax code significantly if they want to. There's all sorts of options in terms of what they can do to provide some fiscal stimulus, in the midst of a quite large shock to their manufacturing sector, courtesy mostly of European autos slowing down. And yet it's just not really something they appear like they want to do, right? And so, Germany obviously isn't the only country in Europe. Our friends, the Italians and French, don't mind deficits. But if, Merkel and co. aren't going to take a leadership role and say, what we need right now is stimulus, then it's hard for countries that are bound by Maastricht and bound by the European Union to ease their fiscal position significantly. And they're just not going to do it if places like the Netherlands, Austria, Germany, Northern Europe are worried badly about deficits when they have no rational basis for that fear.
Yeah, it's just fascinating because if you think about Germany, they're literally getting paid to invest in their infrastructure.
Yeah,
I'll give you one pushback because I've kind of felt the same way as you, George, that we haven't yet seen any sort of uptick in fiscal. And I was out for lunch with our prior guest, Aidan Garib from Pavilion Global Macro, and he actually gave me a chart that showed me the cyclically adjusted primary balance of European countries, and it actually looks like there might be a little more spending going on than we're seeing than we might believe. So maybe at the margin, we're getting a little bit more. And I notice as well that the Bund is kind of gone from that stupid level that we saw this summer and is actually now trading at only minus 35 basis points. Do you think that, 38 basis points as on the close. Do you think that that's just the market gyrating around, or you just don't think that we're at the stage where the Bund we might finally believe that monetary madness is over?
Well, look, what the Bund does isn't purely a function of the fiscal position of the German government. So I think that's important to state right off, right? Bund yields can be making higher highs and higher lows, which they have over the past couple of months. But
there's no doubt if they keep trying to fix a problem with the slowing economy with easier and easier monetary policy, with tighter and tighter fiscal policy, there's no doubt that will manifest itself with lower and lower rates because the economy is not going to respond to that. Do you agree?
In the realm of what anyone would consider conventional, yeah, I think that's probably correct. I think if the ECB or, for instance, the BOJ went out and just started buying stuff, they could definitely generate inflation if they wanted to. Now, whether that would be a good idea or not is another question entirely, and it's certainly not on the table for either of those two economies at this point. If they're just going to keep cutting rates further into negative territory and keep hammering the term premium via successive rounds of QE, then yeah, I mean, there's only so much that yields can rise based on positioning or other factors. With respect to the uptick we've seen in bond yields since the lows, which I think were in August, if I'm remembering correctly off the top of my head, then that move higher can reflect the fact that move downwards in yield was carried away. And just because we're making some higher highs and lower lows now, or higher lows now, doesn't mean that we're on the cusp of a huge upward move in bond yields as Germans finally decide to do some deficit spending and transfer some more resources from the export sector to the household sector. I don't think we're there yet. Like you mentioned, cyclically adjusted primary balance. Well, primary balances are a great way to look at government spending and how loose or tight the fiscal position actually is. The problem is if you start doing cyclical adjustments, then you can do all sorts of funky stuff to make it look good or bad or however you want to make it look. So I'm pretty skeptical. There's certainly room for Germany to run at the very least a balanced budget, and I don't see that as anyone's baseline forecast right now. So if you're talking about an economy as big and stable as Germany with the debt load that they currently carry, with the outlook for their activity, and they're trying to run persistent surpluses, I don't care how small, what the tinkering around the margin is, that's not going to get it done. And so, I don't see a fundamental shift in how the Europeans think about deficits and to the detriment of people that live in Europe, honestly.
All right, George, I'm gonna jump in here, Kev.
Okay, I'll let you have one.
So, George, let's translate your bigger narrative and thesis into some core macro views and that are tradable. Like, what's with the way that you look at the macro world? Where do you stand on things like, for instance, where the next major trend of the U.S. dollar is heading, or what are some of the other big macro calls you have that you think will emerge based upon the way you look at the world here?
So I think long-term rates in the U.S. are still far too low. I think the yield curve is still far too flat. I hesitate to have too strong of a view around the movement of short-term rates over the next year or something like that. But I do think that given, the fundamental demographic backdrop for the United States economy, given the fact that debt levels are still very low or still falling, they're not very low on a long-term basis, but they're definitely falling, and debt carrying costs are still very low on a long-term basis, especially for consumers. It's really hard to look at the U.S. economy and say, okay, well, this is vulnerable to a large shock, and therefore, we've got risk of an impending recession. I mean, the Fed has been incredibly aggressive this cycle in a way that it hasn't been in the last three major cycles in terms of heading off recession. And if you're going to have a Fed doing that, like pulling the trigger early to try and avoid recession, first off, that's good public policy. But second off, that should justify a different perspective around the risk premium on inflation than you had when your last three recessions have all come because the Fed's been too aggressive snuffing out growth when it's gotten nervous about inflation, right? If the Fed is going to be in the long term oriented towards being easy and making sure that the expansion continues, acting as appropriate, to quote Clarita from today, then you have to have a very different perspective on risk premiums for, something like 2s 10s, 2s 30s, 5s 10s, or 5s 30s than you would in a world where you're actually worried about the Fed cranking up real overnight rates to the point where they invert the curve and create a recession. The current inversion of the yield curve we've just experienced has been totally different from the three inversions that preceded the last three recessions. And people say, oh, well, you can't say it's different this time because it's never different this time. Well, it actually is different this time. And the reason it's different this time is because as the curve has inverted into Q3 of this year, it's done so with interest rates at the front end of the curve falling, right? So all rates have come down. Rates at the front end of the curve have not fallen as fast as long-term rates, and so the curve has inverted, but rates have come down. That didn't happen in the prelude to the last 3 recessions. In all 3 of those recessions, what happened was the Fed raised short-term interest rates and kept pushing short-term interest rates up until they moved higher than long-term interest rates and created problems for the financial sector, created a situation where bond buyers had to step in because they were afraid that real rates had gotten too high, and ultimately created a recession. So this inversion has been different. And just fundamentally, if you've got a Fed that's on avalanche patrol, to borrow my friend Mark Dow's term, that's looking for risks, that's trying not to snuff out the expansion as opposed to that's constantly worried about inflation, then you should have government bonds with a much, much, much higher risk premium relative, for long-term bonds relative to short-term bonds, because at some point the Fed is going to overshoot and you're going to see inflation. And that wouldn't necessarily be the end of the world, but for government bond curves, it's hard to look at where things currently stand in terms of the term structure and say, oh yeah, that makes sense for a Fed that's demonstrated its willingness to be much easier than it has been historically when risks start to rise.
So would you also agree that not only should we see a steeper bond curve, but we should also see inflation break-evens take off?
Yeah, the inflation break-even market is just, I'm sure, Kevin, you're familiar with my rants about break-evens and how ridiculous they are as an instrument. These things, because of how seasonal oil prices are and how that translates into the non-seasonally adjusted CPI, which inflation break-evens price off of, you tend to see very, very large movements based on the time of the year that you're in and the level of oil prices, because dealer desks hedge their tips portfolios and their break-evens portfolios with spot or near-term futures for gasoline and WTI or Brent. So what you basically turn the break-even market into is an oil derivative. You cannot look at the break-even market that is using short-term oil prices to hedge risk, up and down in terms of the implied inflation rate, and conclude that that is a reasonable expectation for the movement of inflation over the next decade or half decade or whatever your term is. That's doubly true when you start looking at implied forwards. So for instance, 5-year gets cited all the time, where you're basically in a leverage steepener and extra sensitive to movements in spot oil prices. I've been talking about this for years. A number of other people have as well. And it's very frustrating to see so much emphasis placed on break-evens. Regardless, you've got 10-year break-evens trading in the 1.6 area right now, if my memory serves correctly. That's just not going to fly in an economy where realized inflation has been substantially higher than that of late, and almost certainly will be with a 2% inflation target for PCE as opposed to CPI from the Fed. And again, a Fed that's demonstrating that it really wants to meet those targets, even if it hasn't been able to very effectively hit them perfectly. They want to. You get an extra 0.3% basically between PCE and CPI. So if the Fed is hitting its inflation target, it should be about 2.3% year over year headline CPI year in, year out over the next decade. If they're a little bit short, let's call it 2% CPI year in, year out over the next decade. That leaves no risk premium whatsoever, none, for a large spike in inflation. And I don't think that's likely to happen, but it's certainly something that markets tend to be worried about. So to me, 1.6% break-even inflation is just nuts. I mean, it doesn't make sense unless you're assuming that the Fed is completely going to fall flat and that the whole edifice upon which modern United States monetary policy is built on is just going to collapse.
Okay, great stuff, George. That was a great rant, buddy. I love it. For those who want to kind of hear more of your rants and see why you think inflation break-evens are mispriced or not something you should follow, where can people find you?
So I am on Twitter. I'm at PEARKES on Twitter. You can also check out bespokepremium.com. That's Bespoke Investment Group's website. You can check out a free trial there, or just browse through our blog. Bespoke Invest is our firm's Twitter account. We also have a podcast that's totally free, and a bunch of goodies over on the website. So you can head over there or follow me on Twitter.
I highly recommend it. I think George is one of the nicest guys on Twitter, and I think that has to do with the fact that even though he's living in America, he's actually a fellow Canadian. For those who want to learn more about George's background, make sure you stick around for the after hours. Thanks for joining us, George.
Thanks, guys.
Okay, it's with great pleasure that we re-welcome our first Market Huddle guest, Brent Johnson from Santiago Capital. As I mentioned, the milkshake maven himself. It's a pleasure to have you back, Brent.
Thank you. Glad to be here.
So you and I were chatting the other day, and I thought that it would be great to get you on and just kind of continue our discussion. And one of the things that I realized is that a lot of times, you and I might not disagree about stuff in terms of our philosophical fundamental framework about how markets operate, but we definitely agree about how much is built into the price and how and where we are along in this process. And one of the things that was struck me the most was that I have recently become increasingly concerned that most of the investment professionals have already allocated a fair amount to the U.S. Kind of financial markets, whether that be equities or even bonds. And I worry that the next move might be for them to shed some of those assets, thereby creating an opportunity to be short dollars and actually for the U.S. stock market to underperform. And you kind of countered and said, I'm worried that it hasn't even actually begun, and that this move into U.S. assets is still just in the infant kind of stage, and the really big kind of move into these assets is still ahead of us. I was just wondering, kind of maybe we could continue that discussion. So what do you think?
Sure, that sounds great. And first of all, I should say, for people out there listening, I think this is a great example how it's totally fine to disagree with somebody else, and it can still be cordial. It doesn't have to be like Twitter where everything evolves into like a nuclear war, right? I've seen some of your posts over the last month or so, and I reached out because I thought I understood what you were saying, but I wasn't sure, and I wanted to, and I thought I disagreed with some of it, but I wanted to make sure I disagreed with it before I started launching, missiles at you. And it was a great discussion, right? So anyway, I just think that's something for everybody to keep in mind.
So everyone just be aware the missiles are going to come now that Brent understands my position properly. He's going to launch the missiles. So what do you think? So where are we? Because I was struck by the fact that we actually did agree on a lot, but that you were concerned. One of the things that that struck me most about our conversation was that you said, I think this is just starting. Forget about almost ending. And maybe you could comment about why you think that it's just starting, and the fact that this is going to get a lot worse before it gets better.
Well, basically, I think it's only just starting, and I think I might actually be early. It might call for the dollar to really break out. Now, I've been calling for that for a couple of years, and there's this axiom in the markets. Being early is the same thing as being wrong. Now, being wrong about the breakout hasn't really hurt me because the dollar hasn't fallen, but it hasn't exactly broken out yet either. And I think that it's going to break out. I think we're going to have a fairly big move in the next month or so. But I always try to figure out where I could be wrong, and I can totally see a case where that wouldn't happen. And I think I know why that wouldn't happen. And so I guess my point is if it doesn't break out right now or in the next couple of months, I don't think it negates my thesis. Maybe it just means that I'm still early. And part of the reason I say that is a big part of my thesis is built upon chaos in the rest of the world. And that chaos in the rest of the world, it hasn't really started yet. Now, I think everybody's a little bit surprised that markets have held up as long as they have, whether you're talking about U.S. markets or European markets or the China market or Australia or Canada. I mean, all the markets are, they're kind of going sideways, right? Some of them are going sideways to up. Some of them are going sideways to down. We haven't seen this big move or chaos trade anywhere really yet, other than maybe Turkey or Argentina.
Right.
And so I guess my point is that, that's why I still think I may be early, because until the chaos really breaks out, I don't think we're going to see the really big dollar trade.
All right, Brent. So I want to ask you, though, okay, because generalizing the dollar, I understand why you believe on the bigger picture that's that case. But in your thesis, do you have particular currencies that your attention, cross currencies that your attention is turned to? Because obviously, when we're talking about the Dixie, then we're talking about the euro having a huge weighting inside the basket.
That's right.
I mean, is your attention still very much on the euro in this circumstance? Like, where do you believe that the big weakness will come that will propel the U.S. dollar higher?
Yeah, so again, this is a good point. When you look at the DXY index, it's been kind of flat to sideways for the last, call it 2 years or whatever you want to call it, right? It hasn't really broken down, but it hasn't really broken out. It's mainly because it's the yen and the euro that it's against, and the majors have all been, I guess, somewhat stable. If you look at the dollar against a number of EM currencies and global currencies, it's kind of clearly broken out. But I think that the chaos will start in Europe. Now, I can very well be wrong. It could easily happen in Hong Kong or China or Japan or, somewhere else. But my belief is that the initial chaos will start in Europe. And it could happen very soon.
Right, you were saying that you think the U.S. dollar breakout is very imminent. So do you foresee a situation where the even as bad as the news is in Europe, it continues to get worse?
Yeah, absolutely. And so I want to take a step back really quick and this plays into kind of the dollar action over the last 2 months as well. I have never said that the dollar is going to go straight up with no pullbacks and that it's just going to be this great, beautiful event for the United States and just horrible everywhere else. I don't think that's how it's going to be. I think it's going to go in fits and starts because I think as the dollar starts to strengthen, there will be actions taken to try to weaken the dollar, whether it's by the Fed or other monetary authorities or other central banks trying to counteract that move. That's exactly what we've seen over the last month. Earlier this year, as early as last year, and then earlier this year, I kept saying that when the debt ceiling is raised and the Treasury starts issuing bonds again, that is going to be a big event for the dollar, and that's going to push the dollar price higher. And sure enough, as soon as that Treasury issuance started again after the debt ceiling was raised in August, you saw the dollar start to move up. It got to almost 100. And, we've had the problems in the repo market, and subsequently the Fed has kind of come in and had to provide liquidity. That is helping to push the dollar back down. I don't expect that to stop. I think every time the dollar starts to make a move, official actors will react to that. And so we were going to have these periods where the dollar breaks higher, and then there's action, and it pulls back for a while. And then we'll have a trade higher, and then they'll react and it'll pull back. Kind of the opposite of 2008 with the equity market. The equity market would fall. The Fed or the Treasury or some financial authority would come out with some new plan or some, accommodation. The markets would rally for a little while, and then they'd roll back over, and then they'd have to. And so I think it's kind of going to be that same way.
Okay, so Brent, one of my theories is that if you remember back a couple of years ago, Trump didn't realize the power he had in terms of instituting tariffs unilaterally.
Yep.
And there was Kyle Bass had that famous line. He says, "Nobody better tell him because when he does, he's going to figure it. He's going to use it." I've kind of wondered if the same thing's going to happen on the FX market, in that he's going to figure out that he does have some power. Now, people will tell me it's limited in terms of devaluing the dollar. And I've been wondering if we're going to have a lot more volatility in the market. But one of the things that I've noticed that you've been saying is if he really wanted to use the power of the dollar against the rest of the world, he would actually cause the dollar to rally and actually make a strong dollar. Could you just expand on that thinking and also talk about what you think in terms of whether Trump will do that and whether he will figure that out or whether he will be trying to actively devalue it?
Yeah, so to be clear, I do not think that Trump is going to devalue the dollar. Now, I will admit right up front that is perhaps the biggest risk to my overall thesis, is that he does decide to do it. So I'm not saying it's impossible. It is definitely possible. I just think it is highly unlikely, and I don't think he will do it. And in fact, I think he can use the strong dollar to his advantage much more so than the weak dollar. Part of the reason is because as much as he wants to turn us back into a manufacturing powerhouse, even if he devalues the dollar right now, we don't really have a huge manufacturing industry to take advantage of that right now. Now, sure, it would help us from an export perspective, but we're not even really there yet to having a manufacturing economy. This is going to tie a little bit to my overall thesis as well, is that the strong dollar is hard on the U.S. long term, and I fully admit that, but it is even harder on the rest of the world, primarily because despite all the objections to the contrary, most global trade still takes place in dollars. most debt in the world, even outside the United States, is still issued in dollars. And as the dollar gets stronger and they become harder to come by, it's harder to service that debt. It's harder to get those dollars to trade with. And it puts pressure on foreign economies more than it puts pressure on the U.S. economy. And, you know, whether it's via sanctions or whether it's via SWIFT or whether it's via the dollar just getting stronger, if you limit access to dollars, it has enormous consequences on those countries and those currencies. All you have to do is look at Venezuela and Turkey and Iran as 3 examples. There's no reason that Iran couldn't have a huge economy other than the fact that they've had sanctions on them. So anyway, so that's part of my reason why the strong dollar is a bigger advantage than a weak dollar.
Do you believe that what's been happening in the repo markets and the fact that they've had to provide that liquidity is sort of proving your narrative? I mean, do you think that it's not connected? Like, do you think that this builds upon your bigger thesis?
Oh, it absolutely does. It's exactly part of it. My contention has been that there are not enough dollars to go around to satisfy the incredible demand for dollars. Now, it doesn't matter if people like the dollar. It doesn't matter whether they would prefer to leave the dollar. It doesn't matter that the dollar is hated. What matters is that the dollar is owed. And what I mean by that is there is $20 trillion of U.S. dollar debt in the United States, but there's $13 or $14 trillion of U.S. dollar debt issued by entities outside the United States. So I don't care whether you like the dollar or hate the dollar. You need the dollar to service the debt on which you have borrowed. If you look at the demand for dollars just based on the interest payments alone, it's well over $1 trillion a year, perhaps as high as $2 trillion a year, just to pay the interest. Not only that, but a lot of the principal payments on a lot of these bonds or this debt that has been issued outside the United States are coming due over the next 2 to 3 years. That is demand for dollars, and there's just not enough of them. And when the Treasury comes in, which is the biggest buyer in the world, when the U.S. Treasury issues bonds, they are buying dollars from the market. The biggest buyer coming back into the market from which they've been absent is very bullish for the price, and that's exactly what you saw in September.
All right. Well, Brent, listen, we're going to move on because I know you wanted to share a tale from the trading desk with us. But before we get to that, you're actually going to be joining me out at the Silver and Gold Summit in San Francisco, your hometown. Well, not your hometown, but that's where you're residing right now. I'm looking forward to seeing you, first of all. But Marin Katusa decided to put us both on the same panel. And this is going to be an interesting show.
Can I interrupt there? Brent, I saw that it was Brent, it was Grant Williams, and then Patrick, and I was like, that's like one year. Who was the fourth, Patrick? There was a fourth.
Oh my God.
It was somebody else of good quality, and I thought to myself, this is like when you're playing bridge and you just desperately need the fourth. And you're like, geez, who can we get? No, it's Patrick.
Me.
No, it's Patrick.
Anyway, Brent, you're going to have to cover my ass, all right, buddy? No.
Sounds good.
But listen,
just remember, whatever I say, it's all in good fun.
Absolutely. I'm looking forward to it. Now, but listen, normally, whenever I travel, I try to put together a little market huddle meetup because Kevin and I are together. Kevin's not going to be out there. You willing to grab a beer with maybe some of our listeners if we were to hold a market huddle meetup there during the Silver and Gold Summit?
Sure. Happy to do it.
Well, there you go. So listen, let's target maybe Monday toward the end of the show. We'll do the hotel lobby with beer. So any of our Market Huddle listeners that want to be join us, Brent Johnson and I, and we'll prod Grant Williams. We'll see. I doubt he'll join us, but we'll see if he'll do it. But we'll go out for a beer. It sounds good. Anyway, we'll send out an email accordingly to do that. But okay, let's move on. So you have a tale from the trading desk you want to share with us. So why don't you fire away?
Okay, so this is not exactly a tale from a trading desk, but it's a tale from early in my career. So I think many people know I started off, in the high net worth group for a very large global investment bank. I started in New York, but very shortly thereafter moved to San Francisco. And it was our job to call wealthy individuals and convince them that they should place their assets with us let us take care of their financial necessities, right? And so what we would do is we would scan the headlines for one company that was acquiring another company, or a company that had some kind of a liquidity event. And then we would call the executives of the company being acquired, or, that was being sold, and, convince them that this windfall that they were going to receive should be placed with us. And so, it was always kind of a scramble because everybody wanted these leads, right? And so you kind of had to get there first and get your call in first. Anyway, long story short, I came across a company out of Santa Cruz, which is a surf town about an hour south of San Francisco. Some guy, had sold he had a radio business where he had a couple different programs on a radio, and he had sold it to some bigger media company, like Liberty Media or Viacom or something. And it wasn't for an enormous amount of money, but it was like $5 to $10 million. So it wasn't peanuts either. A lot of money to me, but, compared to a lot of Silicon Valley guys, it wasn't an enormous sum. And so it kind of went overlooked. And so, I called the guy up and, had to cold call him, but got him on the phone and, arranged for a meeting. So now I'm going down to the meeting, and I told a buddy of mine that was a little bit older than me, and he worked for the same company and, had been successful and was further along in his career. So anyway, he said, I'll go with you. I'll help you close the business. So I thought that sounded great. So I picked him up, and this is a big meeting for me. I'm trying to build my business. And I've got my, pinstripe suit on and a nice tie, pressed white shirt. And I pick my buddy up, and he looks pretty nice as well. So we drive down to Santa Cruz, and we go to find the office, and we can't even find it. And we finally find it, and it's like the backside of some dirty old strip mall, for lack of a better word. It doesn't exactly look like a big business. And I just think to myself, well, maybe he's just being frugal, trying to keep costs low. And so we walk in, and there's one person sitting in kind of like an empty office behind a desk, and it doesn't look like a lot of big business is going on in this place. Trust me. And, it's a secretary, and she says, oh, so-and-so, he's not here yet. So we wait like the guy's 20 minutes late to the meeting, and he walks in, and he's wearing, it's a surf town, right? And he had gone surfing that morning. He's got kind of long curly hair. He's wearing a t-shirt, really short, cut off the jean shorts and flip-flops. And he's like, hey guys, sorry I'm late. Come on in. And I'm just like, okay, well, he's late, but that's fine. He just sold his company. He deserves to go surfing. So we walk into the next room, which is the conference room, and there's literally 3 folding chairs, and that's it. And there's no windows in this room. There's no windows, 3 folding chairs, like a dirty carpet. And I'm telling you, it smelled like somebody had like Snoop Dogg had held a party there the night before, right? But I'm trying to keep it together because I'm Mr. Business, and I'm trying to build my career, and I'm trying to close this business. And, I look at my buddy, he's already laughing, and I'm Mr. Serious. So we sit down in these chairs, and we've got 2 folding chairs, and the guy sits across from us in his folding chair, and he's kind of leaning back, and there's no pictures in this room. There's no windows. There's nothing. And so I'm keeping eye contact with this guy, trying to get to create this rapport. And I'm kind of giving him our pitch of why we're the greatest firm in the world and why he needs to put his money in stuff. And every now and then I look over at my buddy thinking he's going to jump in. The whole reason he came is he's going to, use his expertise to help me close this business. And every time I look over, he's just got this big shit-eating grin on his face. And he's like chuckling almost. And I'm like, what? And I'm starting to get more and more pissed off because I'm expecting him to help out. So I'm looking him in the eye, looking the other guy in the eye, back and forth. And I'm continuing to give our speech, and I keep trying to get my buddy to chime in. And he literally starts laughing. And I'm like, what? And I look back, and my eyes, kind of went from this guy's eyes to lower. And the only way to say it is this guy's stuff is just hanging out right there for everybody to see. And at that point, I kind of lost it. And I look back at my buddy, and he is literally about ready to fall off the chair laughing. And I don't know how, it's all kind of a blur to me after that. I don't know how we got out of there. But we basically wrapped the meeting up, walked out. And I guess the whole moral of the story is sometimes the money is just not worth it.
You got to draw the line somewhere.
You got to draw the.
I don't know if that you got to draw the line somewhere. So I don't know if that's the kind of story or not, but that's about the best one I heard.
That's you're right, because not a lot of clients junk is hanging out while you go visit them.
Right. Yeah, exactly. So,
Okay.
what a nightmare.
Well, Brent, I'm going to be hugely upset that I'm missing going out with you because you tell the greatest stories, and I feel like I should hop on a plane and join Patrick in San Francisco because I think we'd have a lot of fun. But thanks a lot for being on the show today. We really appreciate it. And remember, Market Huddle listeners, you want to go hear more of Brent's stories like that, you go to the bar. There's probably some even saucier ones that you can hear up that he won't tell us online.
Just one last closing thing. If you do want to come and join us at the Silver and Gold Summit and watch us have a nice debate on the stage, if you're going to go to the Silver and Gold Summit website, if you use the promo code MACRO50, you can get 50% off of the ticket. And so make sure you take advantage of the promo code MACRO50 when registering for the tickets. And we look forward to seeing many of our Market Huddle listeners out for that. So thanks, Brent, for joining us. It was an awesome story, and I look forward to seeing you in a couple of weeks, bud.
Awesome. Looking forward to it, guys. Thanks.
All right, thanks. All right, Kev, time for the WTF clip of the week. What are we about to see?
Well, Patrick, I had Steve Bannon. He was busy being Steve Bannon, and I had this terrific mashup of because he was shitting all over Elizabeth Warren. Well, actually, I shouldn't say that. He was discussing Elizabeth Warren. And I made this terrific mashup of Saturday Night Live, kind of, how they play Elizabeth Warren, and I kind of worked it all together. And for those who don't know, sometimes we get in trouble from the copyright police. And so we learned this the hard way, that we have to actually put up our picture, our WTFs, and check and see if it'll make the censors. And this one didn't make it. And I tried to fix it up. I tried to cut out and make it a little bit less, and I couldn't get it done. And so the long and short of it is that my terrific SNL, Elizabeth Warren, Steve Bannon mashup didn't make it. And I was forced to improvise, and it's not that funny, Patrick. It's interesting, but it's not that funny, and it has to do with the fact.
All right, well, let's watch it.
Well, let's just watch it because it is interesting. It's just not. It's not one of my funnier ones. It's more kind of interesting.
All right.
You were talking about some of the toss-up states and that it was going to be tough, but
Muhammad Ali had done the impossible, recapturing the heavyweight title from George Foreman. But he was not satisfied. There was one man who'd given him too much trouble, one man who could be pointed to as evidence that perhaps Ali was not the greatest of all time.
But I think in the backdrop we were thinking about Biden, or he was the presumptive front runner then. I don't know whether it's changed with everything we've seen, all the other stuff in the past 2 weeks. But how would an Elizabeth Warren presidency, what does China think of Elizabeth Warren? And what do you think of her chances if she did become the nominee?
That man was Smokin' Joe Frazier. The two had met twice previously. Their first encounter, the fight of the century, had already become ingrained in American psyche as one of the greatest matches in history. The insane action had been fueled in part by the intense personal dislike the two champions felt for each other.
What's interesting, she's just coming out with now the series of white papers. She's actually trying to get to the right of President Trump.
Ali had so enraged Joe that in his locker room before the fight, Frazier had prayed to God to help him kill Ali.
Except for her not fully understanding the tariffs. If you look at Elizabeth Warren, you look at some of the Democrats, they're trying to get to the right of President Trump on.
When the fight first began, Ali had seemed capable of handling Frazier easily, proving himself the first opponent with the talent to read Frazier's erratic rhythm, the reflexes to spot small openings, and the speed to take advantage of them. But then, Frazier had begun to penetrate Ali's defenses, his erratic bobs and weaves getting past Ali's renowned rapid-fire lead hand. Frazier was soon thumping shots into his rival's body, doubling him over and enticing him to lower his guard. The result was a back-and-forth battle for the ages. But
in China, one of the reasons they understand that Biden is compromised by China. They understand in the upper Midwest in these primaries, they've got a real opportunity to blow Joe Biden out of the water.
The way Frazier leaped into his lead hook let him rapidly cover an incredible amount of distance. And it was Ali who had tasted the canvas, cementing Frazier's triumph and destroying any and all doubt about who was the real heavyweight champion of the world.
Because Joe Biden is totally compromised. His family's compromised, and he's compromised with his history during the Obama administration, particularly about the South China Sea and other issues.
The two would meet again only a few years later. Circumstances had changed, and both were now top contenders, fighting for a chance to take their title back from George Foreman. The two men's intense dislike for each other was again showcased on national television a few days before the bout, when a real fight broke out between them on the set of a talk show.
That's why I said, and I think I've said this from the beginning, is that Elizabeth Warren is going to have a centrist challenger.
For their second fight, Ali had planned numerous ways to negate Frazier's aggressive style. He stopped short to lead him into flurries, kept his elbows in tight when clinching so Frazier could not pummel his hands through, and used Frazier's head movement against him, using one punch to lead Frazier into another.
That will either be Michael Bloomberg, or I think I said on your show, Hillary Clinton. I think Clinton and Bloomberg are looking as Biden starts to collapse, and I think Biden's collapse is pretty intimate.
Ali stole the later rounds, turning the fight around and avenging his loss.
By November, December, I think you're going to see a centrist challenge Elizabeth Warren, and we'll see how that plays out. But I think,
leading up to the fight, Ali continued his old shenanigans, holding up a gorilla meant to represent Frazier and proclaiming, "It'll be a killer, a chiller, a thriller when I get the gorilla in Manila."
I think the Democrats in the wanting to replace Donald Trump understand that Elizabeth Warren and some of the populists have been so driven to the left, particularly some of her things about capitalism, some of her things about these asset taxes.
As always, Frazier was not amused. To quote the man himself, "I still despised him for trying to misrepresent me to the public. No one gave his heart and soul to the sport as I did. This was a nasty, envious, mean-spirited egomaniac who still couldn't stand the fact that in the biggest fight of his life, I'd put him on his ass. No."
They've been so driven to the left that a centrist is going to have a real opportunity here. And I don't discount at all that you may see an Ali Frazier, rematch in Hillary Clinton and Donald Trump.
And then it was over. The round ended, and Smokin' Joe Frazier was still standing. Through all the rounds and all the fights, Ali had never once put him down. Barely able to see, the referee guided Frazier back to his corner. As Ali sat down, he had a terrifying realization. He was not sure how much longer he could go on. Of course, he didn't know about Futch's decision. All he knew was that Frazier had taken him to his absolute limit, to a place that he'd never been before, a place he would later call the closest thing to death. In Frazier's corner, Coach Eddie Futch, who'd been witness to fighters die in the ring before, had seen enough. "I'm going to stop it," Futch told Frazier. "You're taking too much punishment." Joe protested. "No, don't. I want him, boss." Blind, battered, beaten, Frazier was in no condition to fight. "It's all over, son," Futch told him. "No one will ever forget what you did here today." And so the greatest fight in boxing history came to a close. Ali could not believe it. He stood and raised his hands in victory. A moment later, he fell to the floor. To quote the man himself, "I was so relieved, so tired, and in so much pain that my knees buckled, and I stretched right out where I was, right there in the middle of the ring." He had taken 440 hard, solid punches from Joe Frazier. Many throughout the years have romanticized the so-called lost round, wondering what would have happened if Frazier had been allowed to come out for the 15th. But the truth is, both men had already given what they had to give. Both had left a piece of themselves in that ring, and for each, it was a piece that they would never fully get back. Perhaps Ali said it best. "We went to Manila as champions, Joe and me, and we came back as old men."
Kev, that wasn't very funny.
Well, it's not funny, but it's interesting because I didn't know the
I'm
story.
only saying that because you told me it wasn't supposed to be funny. So.
Yeah, but it's just I actually found it amazing. I didn't understand the story of Frazier and Ali over the years, and I do think it was interesting. And Steve Bannon showing his age a little bit when he's using that reference. And so now at least all the millennials and even the Gen X's, because let's face it, I think I was 5 years old when that last fight went between Frazier and Ali. I think that now everyone, all the younger people, will know what they're talking about when Steve Bannon is making his references.
All right. Let's move on. Kev, it's time for the top 5 things to watch next week. But before we do, we're going to review what happened last week. And so let's jump right into it. And, well, the bank earnings came in, right? And I'm just going to use Bank of America as an example, but I mean, most of these banks have reacted relatively well. I mean, they gravitated higher, and while the S&P's, even backfilling a little bit, many of these banks are holding up. So as a whole, at least by the reaction to the earnings, we haven't seen anything really negative there, right?
That's right. The XLF is actually pushing to new highs even as the stock market is stumbling, right? Well, not new highs. At least it's moving higher as the stock market is stumbling. It's actually probably one of the relatively strong sectors.
Right. And so number 5, we were talking about Apple at an all-time new high. Obviously, what's going to be really interesting is as we approach the end of the month, what will actually come of Apple after its earnings, whether earnings will be a tailwind or whether it will obviously put in a short-term top. Earnings often play the role of that kind of arbiter. But we continue to see Apple holding those 52-week highs.
I still think it's the cherry Coke loving octogenarian. I feel like he's buying it. I think this is what I predict, Patrick. We prairie dog into the earnings.
Okay. Well, you know what? To me,
sell the news. Like if it's good news,
from a lot of the technical stuff that I do, this is what we have is a bit of an acceleration, which could lead to a short-term blow-off, which could be very much in your narrative where we have like a prairie dog. Maybe everyone gets hyped into the earnings. Maybe we have a rip to 250, and then the earnings are kind of a sell-on news event. It could happen, but it could definitely happen off a higher level. I don't know if selling today is the
no. I don't know if it's today. I'm not sure. But having said that, listen. For all the Apple bulls, all the power to you. Listen, again, we were talking about the XLF. It's doing well. This is doing even better. We're pushing up. Apple is almost at all-time highs, even though the stock market is rolling over again.
Yeah. So number 4, we were talking about the breakout in the U.S. dollar with the yen. And while it certainly hasn't really followed through, I'm actually surprised that it held the way it did in spite of that very heavy selling we see in especially a lot of the Dixie counterparts, like obviously the British pound. We're going to have to talk about our bet later on. But at the same time, the euro, even the CAD and Aussie dollar are all moving. You would think that we would have seen a bit of a bigger reaction on the yen, and it has not.
No, you're no doubt that the cross currencies against the yen have all been screaming higher, right? Like you go look at euro yen and all the things against the yen. It's actually been one of the weaker currencies.
Yeah,
I think it has to do with the fact that still, even though the S&P has rolled over, we're still not that far from an all-time high. I think it has to do with kind of being a somewhat risk-on tone still. And it really, you won't see the real implosion in the yen until we see real problems in the stock market.
Yeah. Number 3, you were right. Now, I wasn't taking the other side of your trade on retail sales, but you know what? I've been far more neutral, and you have been very definitively standing by the belief that the U.S. economy is slowing. These numbers are going to come below estimates. And you've been right. You've been right. Yeah. I'm going to give you kudos for this. You're not right about many things, but
somebody timestamp his ticket because I don't hear that very often.
No, but
you know what?
You've nailed this.
The only person that says it less than you is my wife. Number 2, Euro stocks.
Stock. It's holding up. You know what? I was talking about this on another podcast I cheat on you with.
I know. By the way, can I just interrupt for a second?
Yeah.
I heard you when you were kind of signing off on with Brent. You almost said market. You said market huddle listeners.
What?
It's very disappointing in you. I heard this I heard it.
No.
It's like what you should do.
I did?
You did.
I did.
It's kind of like, oh, there we go.
Yeah.
Lena's you heard it too, right, Lena? It's why you should only cheat on your wife with the same named woman. Just kidding.
I'm looking for a girlfriend.
Yeah, that's right. That's right. You cannot, because you're basically going to screw it up. So you just got to stay this, or just tell her I can only call you this. Okay. Euro stocks they did definitely push up, but you know what? They're in danger of prairie dogging here on a Friday afternoon.
Oh, come on. No way.
They are. That's a dangerous looking prairie dog formation.
I continue to be of the opinion that not only look at the way that the broader MSCI Global Index looks. Everything looks like it wants to break out. Whether it's the Euro stock, even S&P, it looks like these global markets. Now, look, it hasn't broken out, and it's not a breakout until it's broken out. But all of them have edged to their highs, and they're toying, and all they need is just one catalyst, and they could all be off to the races. Look, I don't want to flip-flop from being bearish to bullish right at the worst moment at Prairie Dogs. It makes me look like an idiot. But
you're gonna.
But I'm gonna. No. All I'm saying is that these charts, if I didn't have the bias I did, it would be hard for me to be bearish on any of these charts.
I hear you, but I think that. Listen, I'm not disagreeing. I think that the Euro stocks, here's a bold call for you. I think Euro stocks outperform the S&P 500 handily over the next year.
Right.
So I think
you made that call last week. So
I continue to stand by that. I continue to like it. I know Brent's telling us why the Europe's a disaster. I think that we respectfully disagree, and I think it's all priced in, but we'll see. Yeah. Anyway, number one, the trying to trade deal.
Yeah,
it's a nothing burger, as you would say.
Nothing burger.
I actually think the market was overly focused on it.
Sure.
And I think it's going to basically fade into the background.
Right.
Don't you think?
It could. It's you know what? At this stage, what I think is happening is that they needed to descale the tensions so that the market stops making it their focal point. I don't think that there's going to be a resolution, but what they needed to do by shaking hands in front of a camera and just taking it down a notch, they basically need to kind of tell everyone that it's not about to blow up in everyone's face, and therefore it de-escalates. And if it de-escalates, the market can kind of trug along. I think that's what at least Trump is hoping for. Whether he gets that, we'll see.
We'll see. Okay, let's go to the top 5 things to watch next week.
So number 5, I wanted to just touch on the aerospace index. And so obviously this has been one of the hottest sectors during the last kind of big surge in the markets. And it's been sort of muddling here, more or less. And so here I'm just going to pull up, this is the iShares. Here we go. This is your iShares aerospace and defense ETF, and obviously Boeing did a big break to the downside. I've been short Boeing with my members at Big Picture Trading, so it's been a good day today. But
that's why you're drinking the Caesars and enjoying yourself.
Oh, absolutely. I'm going to have.
That was a big move. Let's pull up Boeing. It's down $23.50 as we write this. $345.
Yeah, I know. It was a bad break. And to be honest, I all along thought I was very suspect of the rally. It didn't sit well with me in the first place, and so the fact that this is breaking. But the bigger question is this the end of this advance? I mean, we have seen aerospace defense running from basically the Christmas pretty much until the second week of September. It's been almost a straight line higher, and we have now seen a sustained distribution lasting almost like 6 weeks. And
but Patrick, if you draw one of your fancy dancy dark magic trade lines there, I don't think it's broken yet, right?
Not this trend line. You're right.
Yeah.
But this is why I wanted to put it on the top 5 things to watch this week, because I just feel that it's pretty interesting to just find out whether or not this is just a short-term blip or whether we're seeing a bigger topping formation. I mean, let's watch. I personally, at least I have a stake in Boeing to the downside, but beyond that, I am impartial and want to see what happens.
Number 4. No, I have no opinion. No opinion.
Amazon earnings. Now, Amazon has been one of the dog fangs, right? Like just has not been able to make any progress back up since its July high. So, the S&P, NASDAQ made it back.
Jeff's selling for the new wife, I think. Seriously. No, I'm just kidding. I doubt he.
Of course it is.
Yeah.
Anyway, so we've got earnings coming up, on I think it's Thursday of next week or something like that, and we haven't had a meaningful turnaround, and every rally has been more or less a retracement. It reverses and sells again. Will earnings be a catalyst to break it down, or will this massive correction come to an end and it joins Apple on the upside and starts to get some momentum? What's interesting is even if you pull up, let's say, those social media stocks, right? And you can see that they've just been dogging, at least the ETF has been dogging it. Now, Amazon's not a social media stock, but there's certain components within this NASDAQ that just have not participated whatsoever, right?
For sure. Well, my favorite part of the Amazon story is the fact that Mark Cuban recently announced that he bought $1 billion of Amazon, which corresponded nicely to the fact that Jeff has sold $1 billion of Amazon this year.
So
there
you
go. I actually kind of feel I'm going with Jeff on this one. I bet you that Mark's going to be more wrong than Jeff. But who knows? Mark's Cuban's a pretty shrewd guy. Maybe I'm wrong, but I just feel that it's gun to my head. I kind of think that it's headed lower before it's headed higher. What do you think, Patrick?
The chart looks like shit. I'm on the short. I don't have any short, but I'd be on the short side if I had to pick.
Number 3. Let's have a look.
Number 3, the ECB press conference. Now we really goochered this one a month ago, right?
We didn't goocher. We just messed it up.
Yeah,
we goocher a lot of things, but we just messed this one up because we
thought last time it was Mario Draghi's last hurrah, but actually Lagarde takes over. I think you were saying November 1st, right? That's
right, November 1st. So he's got one more that he's got to do, and then he can pass it on and go right into the sunset and do $250,000 speech. Events, so he can make himself a fortune, right? Isn't that what he's going to do?
Oh, why wouldn't you?
Yeah, he's just going to give speeches and maybe he's going to join Citadel. Isn't that what? Isn't that? No, I think that somebody did that. Wasn't it Bernanke that joined? Anyways, I can't remember. Who knows what he's going to do? But we got a big ECB press conference coming. Let's face it. The ECB can only screw things up. The reality is that the monetary system, like monetary stimulus, is out of bullets. They have to just stop trying to
say the word
things.
Fiscal. Let's go one Market Huddle episode without you saying the word fiscal once.
Okay, I won't say it. Number 2.
Oil. Now I'm going to leave this one to you.
No such thing as a triple bottom. Big shout out to our viewer. Do you have it on the screen here? Can you pull it up, Patrick?
Yeah.
Path O'Bear, which he actually found. He says triple bottoms do exist. I found the perfect spot for a Market Huddle meetup if Patrick and Kevin ever come to Philly. It's called Triple Bottom Brewing.
Yeah.
And what the only thing that was most amazing about this is that BTC is Twitter handle is BTC Path O'Bear. That's a Bitcoin guy, right?
I don't know.
BTC, doesn't that stand for Bitcoin?
Yeah.
Right? So I'm just amazed that he still listens to me after I say all the things. But anyways,
he says bear. He says bear. So he's bearish.
Oh, that's true. Oh yeah. No wonder he listens to me. He loves me. Because let's check in. Let's check in on Bitcoin. Let's check in.
Yeah.
Where is it right now? $79.61, down $85 as I write this. Only $79. Only $7,900 and $50 above.
Do you call
fair
that
value.
A triple bottom in your eyes?
Yeah, no, it's going to break. Anyways, it's headed to fundamental value. Let's go back to oil for a second.
All right,
because we were joking about it and saying that there is no such thing as a triple bottom, and it actually got me worried because I do believe there is no such thing as a triple bottom, and the fact that oil did try to go down there at $52 or $51.50, and we're bouncing off that, I'm actually kind of nervous. And do you know what would make me feel really good about getting nice and bullish oil, Patrick?
What would that be?
I don't know, like an inverse prairie dog. What would we call that? I can't remember.
That's called the loon dive. It's called the loon dive.
That's not funny enough. That's not a good. We got to come up with something that's like. I think we had one at one point. I've forgotten it. But basically, inverse prairie dog, where the thing.
Mallard. Wasn't it something mallard?
I don't know. It breaks $50. Everyone gets good and bearish. I hear all this shit about like technicals, how it's going to 20. and then you buy it with both fists. That's what I really like. Even though I'm bullish now, it would make it feel even better.
Didn't. I mean, it has really bad inventory numbers, and it went up.
But what's interesting about the inventory numbers, I must say, I traded that day because I saw it, and I saw the inventory numbers were ridiculously large, and I saw the initial reaction was a sell, and I thought to myself, every single time that there's this kind of something that is like an inventory number that moves one way, they always go the other way. It's like you can't trade it on the inventory numbers. And in fact, the bigger and stupider it is, the more you have to fade it. Now, I realize I'm not an oil trader. Real oil traders are going to be laughing at me. But I think too many people look at inventory numbers as the most important factor, whereas I think it's more of a global commodity, and they overdo American inventory numbers as a determinant of prices. But that's just my opinion.
Yeah.
That and a subway token can get you home some days. Number one, let's have a look.
So number one, the Brexit vote.
Oh, yeah. Okay, we got to talk about this. So, Patrick, you know one of my favorite trades is long FX vol.
Yeah.
Like I'm long dated yen, I'm long dated euro, and I delta hedge it, and it's been good to me so far. It hasn't. It's so cheap that it's easy to kind of scrape out enough delta hedging. But I kind of looked at the pound, and I had to look at the pricing of this thing. And you know me, Patrick.
You had to do it. You had to sell it.
I had to sell it. And I looked at it like the front month on I'm just an odd lotters because I just have to trade over the counter. I mean, I have to trade listed stuff as opposed to the guys who are trading over the counter. But I go look at the CME front month, and it was trading 14 bid. Like most currencies, if you go look at even the pound, the March stuff of next year is trading 8, and a lot of currencies are in the 6. So 14 is through the roof. I suspect that this weekend we are going to have the market thinks that we're going to have this monster move in the pound, and I don't think it's coming. I think it's going to move. Yeah, I think it's going to go 200 one way, but it's not going to be enough to pay for that. And that's the trade here.
200. By the way, we have to point out the fact that I epically lost our pound bet, right?
Oh, that's true. I forgot about that.
Next week I'm going to be laying low on the podcast, but maybe the week after when I'm settled in back in Toronto, we should do a part of the episode where we review all of our bets. So
we should. Let's do that.
Where we stand.
Let's do that because I'm looking forward to my burger, my pound burger. It'll be good.
Yeah, the pound burger. You're getting paid because you were right and I was wrong. You're not going to hear it many times.
That's twice you said it this episode.
Yeah.
I don't know. Something's gone wrong. Anyways, Brexit vote. I just think that it's not going to be this dramatic for sure one way or another. It's most likely going to be more of a muddled affair. And even if it goes through, I don't think the pound is going to 140 overnight. I still think that the selling vol here on this weekend is the right thing to do. I know that's crazy. It helps that I have some other vol and some other stuff, and I did it small because it's still a short vol trade. It can still hurt, but that's what I like to do there. Okay.
All right. And by the way, we have number 0.
Number 0.
Canadian. So in our top
Patrick,
5,
did you forget something on the top 5? Is that why?
Yeah, I did.
Yeah.
And
it's not that important or anything, right?
No, it's Canadian elections.
That's right.
And I there was a window for me to do early voting before I left for Florida, and I fucked it up.
You didn't vote. I have a strict rule that if you don't vote, you're not allowed to complain about the outcome.
I can't. But you know what? I'm tempted to fly back just so I can drop a ballot.
Patrick, if you don't, I'm not letting you complain ever.
Well,
I have a feeling you're going to be upset.
I'm going to lie to you. I'm going to lie to you that I did.
Okay. Anyways, it is a big deal. What's your prediction?
Our Trudeau will probably win. I mean,
it's going to be a minority government. It's going to be Trudeau running a minority government with the NDP. That's my prediction.
That's a pretty good odds. I mean, the Conservatives have a shot, but I mean, it's not a shot in the dark kind of outlier. I mean, it could happen, but it's not probable.
Right.
And so
okay.
But do you have a view? Is that going to move the Canadian dollar?
Nope. It's not going to. It's a nothing burger, as you say.
Yeah, unless it's a surprise.
Yeah. But it won't.
Like, I mean, if the Conservatives win, then we could have a big reaction. But if the Liberals have a minority government, I think that's priced in. Nothing happens. All right. Okay, so you had some parting wisdom?
I need to take a huddle break here. Huddle puddle. I got to pee so bad. Okay. Selena, timestamp this. Or you leave it in, I don't care.
All right. So, Kev, parting words of wisdom.
So, I reached out, I noticed that Anthony Crudele, who has a great podcast and a great show, not that you want to do it after your market huddle, of course. But anyways, he actually had a tweet recently where he says, "What's your greatest strength as a trader?" And he says, "Mine is I heal quickly after a loss. I committed long ago that the market won't control my mood. To stay positive, if you set dollar limits to your trades, you begin to heal right after the trade is executed. The outcome is only positive." And I actually realized there's a lot of wisdom in that comment from Tony. Yeah. One of the things is the reason that he heals quickly is because he keeps his loss to levels that he can withstand emotionally.
Yeah.
And that is actually part and parcel of it. It's not that he's just so much better at taking loss. It's that he actually makes sure that he never gets it lost to the point where it's actually affecting him emotionally. I always say if you're in a situation where you're thinking about a trade at night, then you have to cut the position down. I don't know. Do you find the same thing, Patrick?
Oh, listen, I actually take it one step further. This is where I burn theta because I often like to take my trades with big size, but then I always have some sort of a hedge in place. Whether if I'm short, it's calls. If I'm long, it's puts. But I have some way of giving me an exit at a loss that is completely acceptable to my trading style. And so therefore, I can trade bigger and then yet still have a very defined risk that I'm comfortable with before I even put on the trade, right?
Well, there you go. Everyone has to do it their own way. But just remember that you have to make it so that you can sleep at night and do whatever it takes to get that good night's sleep.
Absolutely.
Anyways, thanks for George.
Just very quickly.
Oh, I'm sorry. I'm busy trying to. You got to give your silver and gold thing.
No,
again. Okay,
listen. I have that thing. Yeah, no. Listen, everyone heard it.
Okay, listen.
Brent.
Whoa. Before you do this, try to use our podcast when you're going to say it this time.
What do you mean?
Like last time you were going to say the podcast you cheat on me with.
Okay. So for the Silver and Gold Summit, anyone who is in the vicinity of San Francisco and like to join myself, I'll be on a panel with Brent Johnson and Grant Williams, as well as Cal Everett. That's the name. I apologize for not knowing it when you asked it at the time. But Marin Katusa is going to be moderating the panel. We're going to talk lots of gold. During that session, I also have a separate talk I'm doing on the Sunday there. But we're actually going to have a Market Huddle meetup. Brent agreed to it. What we'll do is just at the tail end of the Monday show, we're just going to head to the hotel lobby lounge, and we're going to have some beers with our Market Huddle listeners. So any of you that can make it out and would like to join us on the Monday, come for a drink with Brent and myself. It'll be a great time. And Kev will be missing you. But also anyone who registers, make sure you use the Macro 50 promo code for your 50% discount.
There you go. Well, thank you very much, Patrick.
Did I screw that up, Kev?
No, you didn't, but it's actually written right there, so I have to look at it. For those that are looking at it. Anyways, I'm just kidding. I know you cheat on me. We have a polygamous relationship, and you're allowed to do that.
All right.
So a big thanks to George and Brent for coming on the show. And for those who want, make sure you stick around. We're going to hear more from George. And a big thanks to Lena, who, what was your, Lena, hop on there.
Yes.
Oh, you're always on.
I'm always on.
Yeah.
You're always on. We'll actually talk beers at the end.
Yeah.
But a big thanks for putting up with us, because for those who don't know, we actually had a lot of scheduling issues this week, and poor Lena had to listen to us, change the scheduling like 7 times before we finally got this done. So anyways, a big thanks. Lena. We always appreciate
for not
You're
quitting on us.
Yeah, that's right. That's right.
Anytime now.
Have a great week. Have a great weekend, everybody.
All right. Anyway, but hey, Kev, where can they find you?
Oh, yeah, we have to do that. At Kevin Muir on Twitter and at themacrotourist.com for the blog post. How about you, Patrick?
You can follow me on Twitter at Patrick Ceresna, and you can also find me at bigpicturetrading.com. And as well, we have to rate these drinks, right?
No, we're going to do that at the end.
This is the end.
No, it's not. We're going to do that now.
You got to wrap up the show first?
Yeah, we're going to wrap it up. See, leave all this in, Lena. It's just awesome. It shows you how organized we are. Thanks, everyone. Have a good weekend.
All right. Thanks, everyone. Stick around for George in the after hours. All right, so here we are in the after hours, and George is joining us. Great to have you back on here, George. And the first thing I wanted to do, well, first of all, are you having a drink and joining us with a drink? What are you drinking?
I'm having what's called a bitter party of one, which I blatantly stole the recipe from a restaurant in Greensboro, North Carolina. So yeah, it's a mixed cocktail. I'm working with Mount Gay rum, so like a darker rum. There's absinthe, which is a wormwood liqueur with star anise flavor to it. Two different kinds of bitters. The Rizzo, which is primarily grapefruit, peppercorn, a couple other flavors. That's from a North Carolina bitters company. Angostura bitters, which is very clovey, like lots of like great like sort of warm spice to it. What else is in there? Oh yeah, lemon and lime juice,
nice.
And then some falernum, which is a flavored syrup. Bunch of different stuff.
So George, I have a question for you. I hope this isn't too personal, but are you a millennial?
Oh, definitely.
Oh, yeah. Okay,
I
that's what I thought. I assumed that. And do you know how I knew that? Because on your Twitter feed, there's pictures of all your food, which is basically which is basically my test for millennials. That I always ask somebody when I need to know if they're a millennial or not. I ask them point blank, "Do you take pictures of your food?" And if you do, and you post them on Twitter or Instagram, and it's only millennials that do it. Us Gen X's don't do that. I do want to say one thing. While you were telling me about bitter party of one, I Googled it and I realized I got the Urban Dictionary one definition. It's not. Read it. It's not bad. It's not like one of those ones where you're like, oh, don't when John Oliver says, oh, you should Google it on the Urban Dictionary, and then you're like upset about it. You feel a little nauseous after reading it. It's not one of those, but it's an individual who sulks in a corner after being caught in an embarrassing moment. Someone who has been served and cries about it. Troy showed up to the party with Meg and his ex-girlfriend. Lisa saw them. Now Lisa's having a bitter party of one.
Oh, I love it.
So, George, you're a fellow Canadian. Where are you from?
Born and raised in British Columbia. So I grew up in Nelson, British Columbia, southeast BC. It's sort of between the Rocky Mountains and the Okanagan, kind of equidistant, West Kootenays.
Right. Now, it's Nelson.
When did you move
Nelson has a ski hill, right? Doesn't it?
Yeah, Whitewater is the ski hill I grew up skiing. So it's about 25 minutes from where I lived growing up, 25 minutes from town. So yeah, when I was growing up, it was just 2 double lifts. They've since done a bit of an expansion, but it was voted at one point in the late 1990s the best snow in the world. It's got a really unique microclimate with awesome powder, huge snowfall every year. I mean, we get something like a cumulative 30 plus feet of snow into that valley every year. So it was a great place to grow up skiing because there was always something new piece of terrain or trees or, powder bowls or whatever you wanted to explore and ski on.
Speaking of powder bowls, isn't it just 1 second, Patrick? I got to go down this road a little bit. Isn't it a bunch of potheads that live in Mount Nelson?
Yeah, so the anecdote I like to illustrate how big pot was the underground economy and really the whole economy of the town I grew up in. When I was a kid, when I was growing up or a young man, Rolling Stone wrote 2 different articles about the pot culture in Nelson. So, yeah, I mean, there was like a head shop with a Bob Marley mural as big as the building on it. I think there were at one point 2 different hydroponics shops in a town of 10,000 people when I was growing up. So, yeah, I mean, lot of pot culture for sure. And, of all the different subcultures you could have, that's probably not the worst one. Certainly didn't get in the way of Nelson being a really friendly and inviting place where a lot of people go to check out in the summer and get some great mountain views or ski in the winter, and really nice folks. So it definitely wasn't a bad thing, but I do get a kick out of it looking back on it.
Yeah, it's kind of funny because I love going cat skiing, and I always go to Revelstoke or somewhere around there, and it's always when people talk about it, the locals always talk about somebody being from Nelson, and they go, "Oh, that's the real pothead place," and I think to myself, these are people from Revelstoke saying that the Nelson guys are real potheads. I'm thinking, how bad is Nelson got to be for them to think that's a pothead? Anyways, it's not only
next
that.
Time you go cat skiing, you got to check out Baldface, which is the Nelson operation. I had lots of friends that worked there when I was in high school and college. So Baldface for your next cat skiing expedition out west, in my opinion.
Or your next wanting to go and get stoned for 4 days. Go check it out. So, George, not only are you a proud Canadian, you're also the great-grandson of a very famous Canadian, right?
Yeah. Yeah, so my great-granddad was George R. Pearkes. We share a first and last name. No middle initial, blessedly, is not identical. Otherwise, that would be impossible to find on Google. So yeah, he held a number of positions throughout his life in Canadian military, police, government. At one point, he was the commander-in-chief of Canadian forces in Europe. He was transferred over during the Second World War. He was transferred over before D-Day and before things really ramped up on the continent proper, but to take over West Coast defenses. But he ended up as the Minister of Defense under Diefenbaker. And if people have ever heard of the Avro Arrow, he was the Minister of Defense that canceled that project. So if it weren't for my great-granddad, Canada might have had its own supersonic jet fighter ready to take off and defend the northern flank of the country against the impending menace from the USSR.
It's funny, George, I just Googled you and I realized that your grandfather has an icebreaker named after him, which I'm sure you know. So it's not often that we get somebody on the show that has basically has an icebreaker or a boat named after them at all. So have you ever seen it? Have you ever gone and seen the CCGS George R. Pearkes?
I haven't, but when I was growing up, we had a dear family friend who since passed, who was a talented woodworker, and he actually built a model of the George R. Pearkes icebreaker for us to have, for my brother and I to play with, and whatever. And he painted it red and white and the whole bit. So, and it was a great toy boat, floated real well, and was super stable and the whole thing. So I've never seen it in person, but I did have a toy boat.
It's because it's based in Newfoundland, so I don't blame you for not going. It's probably a little cold. Anyways, let's talk.
Bit of a long way to get to from anywhere I've lived recently.
That's correct. Yeah. Okay, so let's talk some markets. Patrick,
well,
did you have a question?
I just got to ask him one question. As a Canadian, have you? I'm drinking the national drink of Canada, the Caesar. I just wanted to know whether you've recently had one and what you think of this drink.
Where you stand on the Caesar.
Yeah, so I mean, obviously, the Bloody Mary is the American version of the Caesar. For people that aren't familiar, a Caesar. Well, look, I didn't say it was better or as good as a Caesar. I'm just grounding people in what we're talking about here. So a Bloody Mary, obviously, you've got tomato juice, you've got vodka, usually vodka, sometimes gin, but usually vodka. You've got horseradish pepper, some sort of hot sauce to spice it up a little bit, and then often a garnish or two, like a piece of celery or pickle or whatever. In Canada, it's the same drink, but instead of tomato juice, it's clamato juice. Now, a lot of Americans won't be familiar with what clamato juice is. It's tomato juice with clam juice, right? Yeah. And that sounds awful, but it actually makes a much better cocktail. So I am a huge fan of the Caesar. I'm there for the Caesar. It is the correct way to do the drink. It's much more interesting. It'll gross people out in a fun way that's a conversation starter. I regularly buy clamato juice to sort of do our own homemade version. It's a little bit of a pain to get it seasoned correctly, but we will do that at home for sure. So yeah, a big fan of the Caesar. It's a great drink. I'm not sure I would classify it as Canada's national drink. I mean, It is delicious though, and my buddies and I had a great gag a while back. My Canadian buddies on WhatsApp, we would always send each other pictures of Caesars that had extreme garnishes. So you'll sometimes see restaurants that will do like as a gag sort of special dish or whatever, special drink to get attention, a Caesar that's got like a mini piece of pizza and a mini hamburger and 3 shrimp and an oyster and 4 different kinds of vegetables all stuffed into this just mound of stuff on top of, you know, your on ice cocktail. So the Caesar's a great drink. It's definitely a Canadian tradition, and I salute your Caesar choice. Well done.
Oh, absolutely. You know, I was saying earlier that the key, and I picked this up from this place out here in St. Catharines that started doing it, is you got to put a little pickle juice inside the Caesar. It actually is pretty epic. Anyway, I'm enjoying one right now. I had to smuggle, because I'm down in Florida when we're recording this, and I had to smuggle my own Clamato down here in order to be able to enjoy some Caesars down here.
Well,
You couldn't get it in Publix or whatever?
Sorry?
You couldn't go to Publix and get Clamato? Because you can get Clamato at Harris Teeter here.
Oh, really? I've been looking down in Florida.
You smuggled it for no reason at all, Patrick. You didn't need to. One last drink question before we get on to the markets. So one of my favorite beers of all time is Granville Pale Ale, which heralds out of the great city of Vancouver. Were you a fan? Did you grow up drinking that, George?
Just before I answer this question, I apologize. I've got 2 dogs who tend to go nuts when anyone knocks at the door, so I've got them in my office. The consequence of that is that they've gotten a little rambunctious and have been wrestling, so I really apologize to anyone listening to this. If you hear them in the background, it's just my 2 puppies tearing each other apart. I'm really sorry.
No worries.
I couldn't be calmer. As far as Granville Island Brewing Company, good beer. We had Nelson Brewing Company when I was growing up. So, you know, long before there were brewing companies in every town scattered across North America, often more like 2 or 4 or 6 in every small town. We had Nelson Brewing Company. We had our own coffee company as well, Oso Negro, which is great coffee if you happen to see it somewhere. But Nelson Brewing Company had. Sorry.
No worries. No worries.
Nelson Brewing Company was what we used to drink when I would go back when I was very late in high school, or when I would go back for college break when I was in college. And then Kokanee is the other thing that would get a lot of attention, because that brewery is down the road in Creston. Kokanee is sort of a more mass market beer. The way I like to explain it to Americans is Coors Light, but for Canada.
Yeah, I was going to say Kokanee, like bragging that it's from your neck of the woods is not a good thing.
Kokanee's great. I will put Kokanee up against your Molsons any day of the week. And Labatt, come on now.
Oh, yeah.
Come on
This
now.
is an East versus West thing, and you know what? As a Winnipegger, I'm kind of in between. But so you didn't grow up drinking Granville. You basically think your Nelson Brewery is better. But what do you think of the Granville today?
I haven't had Granville brews in forever, so I couldn't give a fair assessment. But if you're ever in Vancouver, the Granville Island Market is fantastic. It's a must visit. It's super cool. You can take a water taxi to this awesome indoor market with all kinds of food and specialty, like, butchers or flower shops or anything you can imagine, really. It's millennial paradise. You'll be able to Instagram all kinds of stuff from there, and it's really great. So if you're ever in Vancouver, go to Granville Island. You can check out the brewing company too, but Granville Island's market is definitely a can't miss.
Okay, so let's talk some markets.
Yeah, so I'm going to ask the question, George.
Okay, you go ahead.
I'm going to ask this one because I really want to translate. So, I mean, we talked all sorts of things like steepeners and other types of trades to put on. But for our listeners, like if you had one trade to recommend to our listeners that's like an idea that you have that you think would be a great theme to put on, what kind of a trade would you recommend?
So one thing I have been early on and been pretty wrong about so far, but, mea culpa, has been European automakers. And so the reason for this is that there's been a really, really negative sentiment around the sector related to how people think about the cyclical backdrop for autos in Europe specifically, and generally their exposure to the rest of the world, which is dominated by China. The thesis basically is that Chinese auto sales aren't going to continue dropping for very much longer, right? Like they vastly undersell autos relative to what they're capable of given their population and income level. And the recent downtick is going to bottom out. And when that happens, all sorts of good things are going to happen for these very traditional manufacturing businesses that have high fixed cost and that really get a lot of operating leverage when things tend to turn around, just as operating leverage has hurt them on the downside since roughly the end of 2017. So that's a sector I really like. They've got a bunch of US ADRs across the different manufacturers and parts names in Europe. And it's an interesting way to get sort of asymmetric exposure. Very, very high risk. I would be the first person to say, very high risk trade to put on. And because, these names move or not, Renault was down 11% today because they guided down towards the end of the year. And what looks like, hopefully, is the kitchen sink guide for that company. They've also had a whole bunch of drama around the tie-up with Nissan. That's just been a massive pain for someone like me who doesn't really care about the corporate finance aspects. Sorry, 1 second.
It's okay. I'm going to jump in here, Patrick. You know what? That's probably almost as crazy a call as
our bank
as like
bank.
Buying European banks.
Sorry, guys. I just had to kick them out.
No worries. So George, I was laughing. I was saying that is my kind of call. That is got to be one of the gutsier, most unloved trades that I've ever heard of. And I'm going to go and do some work on it this weekend.
So George.
Because that's my kind of that's kind of my contrarian call.
So we have a bet between Kevin and I for Deutsche Bank first touch $10 or $5 for the US dollar price. Whose side do you take?
Can you guys pull up the chart because I don't even know where DB's been trading recently.
It's about $7.92 right now. I think when we did it, it was right at $7.50. And, there's all the rules of the world that think it's all going to negative, it's going to be zero because, and rightfully so. He's been bearish.
Kev's level and here's my level.
I'll take Kev's level. I'm going to side with Kev on this one.
Ah, there we go. George is my kind of guy. See, it's us Westerners. It's stick together, Patrick.
So I will say, like the thing with Deutsche Bank is, and this is a confusion I think that was very significant when these, European banks and Deutsche Bank specifically were making new lows earlier this year. And, people were flipping out about it and how it's the end of the world and they're going to fall to all-time lows and go to zero and all this stuff. There's a big difference between solvency issues with banks and profitability issues with banks. There are very few solvency issues with banks anywhere in the developed world right now. The U.S. is by far the cleanest dirty shirt, and it's not dirty at all. The cleanest shirt in the room. Australian and Canadian banks, maybe not quite as clean if the real estate markets really continue to suffer there. But European banks have a massive profitability problem, right? They've got huge cost of capital. They don't make very much on their lending. Lending growth has been growing at a decent clip in Europe, but they haven't been able to generate really high returns on equity or the kind of returns on equity that you would need to sustain higher valuations. So, there's a huge difference between what happened in 2007, 2008, where, you had massive solvency issues, and that was also true in 2010, 2011 as well. You had solvency issues, but you didn't, the profitability wasn't what people were worried about. They were worried about whether the bank has, more liabilities than they have assets. Now, nobody's really concerned about the amount of equity that European banks have. There is no reason to suspect the entire sector is going to go bankrupt on a solvency basis. The issue is they don't make any money, right? They don't make anywhere near as much money as they should. They've got very low returns on assets, very low returns on equity relative to history. They're still probably cheap relative to that, but if you can't get that moving in the right direction, why own the stocks? And that's the problem, as opposed to they have huge, huge liabilities and not enough assets to cover them, and that's a problem. So that's my spiel on European banks.
Right.
Okay, just on signing off, George, why don't you give us one more trade? I love the idea about looking at German automakers. Why don't you give us one more that people might want to have a look at? What are some of the other things that really intrigue you?
Or even just a broad market call. Do you think the market's going higher or lower here? What's your take on the S&P?
So I just real quick, to throw some numbers at people, I looked today at what the S&P says analysts think about the outlook for operating earnings going out to the end of 2020. So if you assume that the analysts are right, that's obviously a big leap to get to, and prices don't change, then the multiple at the end of next year, so the end of 2020, will be 15.6 times. If you assume that operating earnings are 5% too optimistic in each quarter, and the market actually goes up 10% per quarter, or 10% annualized over the next, 15 months here, basically, you will see a December Q4 2020 multiple of 18.5 times. So the point there is not to say that U.S. stocks are insanely cheap, but barring some sort of large disappointment on earnings over the next year or so, it looks like the U.S. market is pretty attractively valued when you consider that the peak for multiples in terms of operating earnings for the S&P was 22.2 times at the end of 2015.
Right.
Currently we're at 18.4 times, I believe is the number, and we've been as low as 17.6 in the last couple of years. So it's really hard to look at the U.S. equity market right now and say that's overvalued, that's ridiculously aggressive. And if you're going to say that it's not overvalued, then forward returns roughly in line or maybe slightly below, but generally, in line with the long-term averages start to look like they make a lot more sense. And saying, oh, well, I can expect equities to go up roughly 10% when the markets move sideways for 18 months. And, we've sort of been digesting some big gains from 2017 makes a lot of sense. And I think that is relatively out of consensus if you think about the concerns right now over earnings for Q4, if you think about how the market's thinking about the risk of recession, if you think about how the market's thinking about global trade headwinds or risk related to the election in the U.S. in 2020 or whatever reason you have to not buy stocks here, valuations don't look very dramatic. And if you think that's true, then you probably think owning U.S. stocks with an eye towards what should be pretty standard historical returns makes sense, and therefore you should be at least relatively exposed to U.S. equities, and probably, because they tend to move together, global equities as well.
Do you? So what's your over/under in terms of is the market overestimating the probability of a recession here? Do you think that there's a better chance than not that we don't see one here, or do you think that that this is something something that inevitably will happen here?
What I would say about recession risk is that the U.S. equity market is not pricing a huge amount of recession risk. There's certainly some recession risk pricing in specific stocks or sectors or, relative to long-term returns. But it's hard to look at U.S. equities where they are right now around 3,000 and say, oh, well, that's obviously super, super bearish about, the outlook for the U.S. economy. Interest rate markets are another story. But as I talked about earlier, that bull flattening as opposed to bear flattening of the U.S. yield curve makes things look really different relative to prior pre-recession periods. And so, where I come down on recession risk is that recession risk is much lower than the consensus is, which has been true for roughly 10 years now, right? We've seen since 2009 constant drumbeats of negativity, constant drumbeats of high risk of a double dip recession or a recession that's kicked off by what's going on in Europe or emerging markets or the dollar or oil or whatever is going to be the next big pain trade. And as a result, the investors have consistently overestimated recession risk. And I think that's, as long as that's true, recession risk is lower than people tend to think it is. So for me, recession risk right now, as of today, is certainly elevated relative to where it's been over the past 10 years, but it's not particularly high. And it's especially not particularly high if you look at data as opposed to what fixed income markets are saying in terms of the shape of the curve or, not controlling for the fact that it's been a bull flattening as opposed to a bear flattening.
All right. Well, George, listen, I can't thank you enough for giving us an hour of your time to kind of take a deep dive into the macro markets here. But before we let you go, why don't you just one more time let our listeners know where they can find you and follow you, and even a little bit about your podcast that people can listen to after they finish their weekly market huddle.
Absolutely. So my name is George Pearkes. I am the macro strategist for Bespoke Investment Group. You can follow me on Twitter at Pearkes, Pearkes. You can follow Bespoke on Twitter at Bespoke Invest. BespokePremium.com is our website, which you should check out for our blog or for a trial of what we put out every week. You can also check out our podcast, which is totally free. We call it Bespoke Cast. It's not weekly like you guys' segments are, which I'm envious you're able to put out a podcast every week. I'm not capable of doing that. So we have irregular podcasts, but there's a large back library with a whole bunch of different kinds of investors and market commentators and folks that have interesting things to say. So you should definitely check that out as well. And guys, thanks for having me on. It's been great to talk to some fellow Canadians and talk drinks and talk markets. And let's do this again sometime.
Oh, absolutely. Well, George, thank you very much for joining us, and enjoy the rest of your weekend. Thank you very much.
Thank you.
All right.
Anyways, let's talk beers. I love my Moosehead. It's awesome. I don't even need to say any more.
I didn't even
I'm gonna
such a rich history.
Oh yeah, I'm gonna give the Moosehead like it's.
Well, you know
Indiana.
what?
9-2 for the Moosehead. 9-2 for the Moosehead.
Wow.
So, by the way, just while staying on the Moosehead, so you give it a 9.2. Good for you. I don't disagree. It's a smooth drinking beer, but my 17-year-old daughter is with me down here in Florida, and we're walking around, and she's wearing a Moosehead T-shirt. And everyone's like, "You guys Canadian? You guys Canadian?" Like I'm wondering, what am I? I'm looking at myself like, why would anyone assume I'm Canadian?
Because you're drinking a Caesar.
And it's like,
you're drinking a Caesar, and you know what the other thing is? It's probably because you're in shorts and a T-shirt, and they're all bundled up.
Probably.
Floridians say that all the time, that they can tell the Canadians because they're walking around and the fact. I know I've been there in February and I was the only one going swimming, and they were like, "Oh, you have to be Canadian." I was like, "How did you know?" And they're like, "Only you idiots go swimming in this."
All right.
It's something about also. Don't you think when you're out, you could actually tell Canadians?
Yeah, the ones that bump into walls and stuff, and they say sorry.
Yeah. Well, I don't know. There's
to
just
the wall.
something
So you say sorry to the wall.
I don't know. I was in Hawaii once. I was doing the road to Hana, and we got out to go and jump off this. There was a stream, and there was a pool, and there was a cliff jump that you could jump off. And for some reason, I just there's this other family there, and I didn't even have to ask them. Somehow, I just knew they were Canadian. It's
No,
like
maybe
it's
you
like
have
we
some
smell
spidey
different or
sense.
something. I don't know. There's something about.
Were
it.
they wearing flannel or Canadian
I just don't
tuxedo?
know why. There's just something about the Canadian tuxedo. Only Ryan Reynolds is allowed to wear the Canadian tuxedo. Oh, yeah.
Anyway, Lena, your beer.
My beer.
How's your
This
beer?
was pretty good. I have to say, I would give it probably a 7.8.
7.8.
Yeah,
Not
that's
bad.
for- that's for
I mean,
me
but
dating
that's on the
Belgian
bottom end of your range, isn't it? Like you don't usually go much.
I'm a little bit indifferent about this beer. It wasn't super memorable, and it wasn't like.
You should have had a
Would you
Moosehead.
buy it again?
I'm sorry, say it again.
Would you buy it again?
Yeah, I think so, but it wouldn't be my
Lena-
first choice.
Lena would buy any beer again. She basically just loves beer. That's
No,
why we
I
have
would
her.
always get somebody else to buy beers for me. I don't buy beers.
That's
for
right.
myself. Come on now.
Well, I'm not even gonna say anything else about. I'm gonna rate the Caesar because it's Canada's national drink. I'm gonna give it a 10 just because of the patriotic duty.
You
of
can't
this
do that
wonderful drink.
because like Portnoy
Because it's
says,
not a
like-
beer. I'm rating
But you
it.
can't,
because-
no, but you
And
can't
you
go any
made
higher.
it.
So you mean it's
Yes,
a perfect drink?
I
So
will-
there's
then
so
maybe
if all
there
of a
is
sudden,
maybe there's one way. Okay, 9.99.
Okay, that's
maybe
fine, that's
some little thing that you could add to the Caesar and make it better. But you know what? The Caesar is in a class of its own, and we're gonna go back to rating beers normally, but the Caesar is a Caesar, and I'm not gonna say anything else.
I do love a Caesar.
Yeah. Caesar's good.
I don't like them. It's like I don't know. I'm not
Well,
Canadian
what?
enough or whatever.
Oh my God.
Oh,
Whatever.
I love
And you know what? You've just gone a notch
Well,
down in my book.
to be truthful, I'm not very much. I don't like any liquor of any sort.
Okay, stop this. Okay, we'll stop the recording quickly. This is over.
No,
I'm
no.
Done
For you-
with Kevin for the day.
Okay. Well, there you go. We'll leave it on that note.
Kevin doesn't like
Have a great
Caesar.
weekend, everybody.
All right. Have a great weekend, everyone, and thanks, everyone. Have a great
Take
weekend.
care. Bye bye.
Bye-bye.